Good afternoon. I hope everybody's doing well, and welcome to our little tax department presentation of tic-tac-toe, how to win, or at least not lose so badly, because you can never really win with taxes. The tax department consists of myself, Ken Fetzer, Nick Leto, and Alexis Yamashita, and we have a handy email address you can always reach us at tax@dominionpayroll.com. So here's our tic-tac-toe board, and we interviewed 100 people, and these are the adjectives they came up with when they hear the word tax. The first one will be exhilarating, obviously, righteous, unforgettable, and where the party's at. So we've already won the game, and it should be all downhill from here. Some notable statistics for your Dominion Payroll Tax Department. Last year, we paid out over $500 million in taxes, which is impressive and depressing at the same time. And we've already surpassed this in the current year. One statistic we're really proud of is that 99 cents out of every dollar is paid electronically, which is unbelievable. Electronic is obviously safe, secure, and just the way to be. And in the past 2 years, our e-file return ratio has doubled. So that's your quarterly reports such as the 941 or your unemployment returns, things like that. So it's doubled and it continues to grow, so we're very happy with that. Some important dates: November 19th, you're going to go back to your office and you're going to audit your employee records. That's your social security numbers, your addresses, your employees' states. And I would also advise to send an email to your staff to have them look at their pay stubs for any discrepancies, because they know their socials better than you do. December 31st is your last day to process 2015 payrolls. We don't recommend waiting all the way to that date. If you have any information that needs to get into the tax year of 2015, just get that to us as soon as possible. It's when the information comes in later than that is when we start to have problems. So your W-2s are going to be delivered to you, and January 22nd is the last day we're going to send them out. So they start going out on the 11th. If you run a payroll between the 11th and the 22nd, we're going to take the W-2 package, attach it to your payroll, and of course if you have any 1099s or ACA returns will also be attached. And so when you get your payroll, you'll also get your W-2 package, and then you can distribute them to your employees. January 29th, the W-2s become available electronically for your employees. We like to wait till the end of January, because if we do it any earlier, the employees might automatically go and print out their W-2 and file their taxes, and then let's say an adjustment comes in a few days after, which changes their W-2, they'd have to go refile and it becomes a mess. So we wait till the end of January for that. And then your employer deadline to distribute W-2s to your employees is January 31st. So if you're mailing them out, the postmark date can be January 31st, but you'll have your W-2s way before then, so just get your W-2s to your employees before then. You have the obligatory Obama tax picture, hilarious. Most common problems that we see that we're going to try to help you avoid is, like we were saying earlier, there's fringe benefits and these year-end adjustments, including third-party sick pay, personal use of company car, owner's health insurance premiums, things of that nature that sometimes you might be waiting on somebody else for that information. So basically our advice is to do the best you can at getting this information to us. If you get it to us before the end of 2015, you're not going to have any problems. It's when this information comes in like January 7th, January 15th, because if there's any taxes that need to be paid with that adjustment, then those are going to be considered late. So that's really where the problem comes in. Incorrect Social Security numbers is also big, and employees in the wrong state. And we're going to show you some reports on how to check for those. Okay. So the employee W-2 preview and the employee W-2 verification reports are for you to check addresses, the employee's tax state, Social Security numbers, things like that. And then the exceptions and year-end exceptions report checks other information such as, missing account numbers, basically missing tax account numbers, any negative wages that might accidentally have happened, and any variances. Variance meaning Social Security or Medicare tax amount is incorrect compared to their taxable wages. And we're going to show you where to get these reports real quick. They all can be found under the reporting tab and report archive right in your regular reports. Employee W-2 preview. So what that's going to show is basically what the W-2 is going to look like. You see your social, you see your box 1, box 2, box 3, box 4, box 5, box 16, you see there in the bottom right. So box 16 is your state wages, and if you see the description on this W-2 is VA. So this is where you can check to make sure that your employee's tax state is correct. Like for example, this looks like Mary Smith over here lives in Tampa, Florida, but she's got VA wages, so something's going on here. So those are the kind of discrepancies you can look for. The verification report gives you kind of the demographic information. It shows the name, employee number, social, birthday, these types of things. So it's just a nice report you can run to take a look at all your employees in one place. And then you have your exceptions and year-end exceptions, which also show up right in your report archive. And like we said before, some missing tax IDs, negative wages, variances, invalid Social Security numbers. So these are all just good errors that can be caught now and fixed now instead of waiting till January. So we wanted to inform you on some really important tax information here. We found some super weird taxes, including the sliced bagel tax, which we found that a sliced bagel is taxed. However, a non-sliced bagel is not taxed. So just make sure you choose wisely. You also have your crack tax. So if you do plan on doing crack, I wouldn't recommend living in Tennessee because they collected $1.5 million from this tax in 2006. In some states you have your flush tax. If you live in one of these states, we would advise that if it's yellow, let it mellow. And then you of course have your Utah sex tax. So if you employ nude workers, you're paying an extra 10%. So just some good info, some good info here. Just jot it down. So wanted to give you just a small demonstration of how the tax module works in the new system iSolve. So taxes are all driven off two things: resident location, which is where the employee lives, and the work location, where the employee works. So let's say you have an employee that moves to Maryland. They lived in Virginia, they moved to Maryland. Well, when you change their zip code, it's going to automatically change their resident location. So you see down here where it says resident location, it's got VA and then it's got 7 digits. That is a geocode, and what it's basically doing is it's pointing to a small part of Virginia. It's called a geocode. So for Virginia, it's not really a huge deal because Virginia doesn't have any local taxes that are run through payroll. But let's say you have an employee that moves to Pennsylvania. Well, then it's really important which geocode populates, because that points to that little township that this employee lives in, and it makes sure that the local taxes are set up correctly. And we'll show you that on the next slide. The work location is set up by Dominion Payroll, and as you can see here, this person works in Richmond. So when we set up the work location, we use the same thing. A geocode is picked, and the system knows to take out the correct taxes based off this combination of the resident and the work location. So let's say you had an employee that moved to Pennsylvania. Well, you type in this person's zip code in Pennsylvania, 17020. Look at this. About 7 townships pop up. So that means that they're within this one zip code. There are multiple different townships. So how do you know which one to choose? Well, first place I would go is the employee, because most of the time the employee knows which township they live in. If the employee doesn't know, you can ask us, and there's a way to check the employee's address on a Pennsylvania website. But basically just pointing out the importance of choosing the correct township, because that then chooses the correct geocode, and that's ultimately what drives the correct taxes from being set up. So some of the states that have local taxes, Wilmington, Delaware, Kentucky has multiple, Missouri, if you have employees that live in Kansas City or St. Louis, New York City, Yonkers, Ohio and Pennsylvania have many. It's pretty much everywhere. Every employee in Ohio and Pennsylvania should have local taxes. And then West Virginia has Charleston and Huntington, if you have any employees there. This tax season is going to be rough. That's hilarious. So tax updates for 2016. This is going to be the easiest thing you have ever seen because nothing has changed. Social Security tax wage base is $118,500, and that is the same as last year. 401k contribution limits, same as last year. Simple IRA contribution limits, same as last year. So it makes it very easy on us and on you. Social Security and Medicare is the same. So Social Security stays at 6.2%. The employee pays that, and then you as the employer match that. Once the employee hits $118,500 for the year, you don't have to pay anymore, and the employee doesn't have to pay anymore. Medicare never expires, and actually once the employee hits $200,000 for the year, the employee actually has to pay an extra 0.9%. The employer doesn't have to do that, but the employee does. That's called an additional Medicare tax. Third-party sick pay is always a little bit of a confusing thing, because third-party sick pay is when an employee leaves for an illness or a disability and is paid wages through an insurance company. And what the insurance company does is they pay wages to this sick person, and they pay the employee taxes on those wages. And then what they do is they send it over to the employer, and they say, hey, you need to pay the employer taxes. And that's why you have to give us that information, because we put it into the system and we pay the employer taxes. Now the confusing part is with the W-2, because those wages need to report on a W-2, and the third-party sick pay companies, they have an option in their system where they can either file the W-2 or not file the W-2. the problem is if they file a W-2 and we file the W-2, then it's double reporting those wages. So to make it simple, our system automatically files the wages on a W-2. So we have to do the W-2, which means that you need to make sure the third-party sick pay company is not filing the W-2. So basically all they're doing is paying the employee taxes, and then they don't file the W-2. We do everything. If you have any questions on that, send tax@Dominion Payroll, and we can figure it out. If you are a large company and had over 250 W-2s last year, again, as part of the Affordable Care Act, we need to report the total premiums paid in box 12. This is purely informational. What it's doing is it wants to show the employee the benefits they're getting from their employer. So it's showing them how much money their employer paid for their health insurance, basically. So we already have the employee premiums in the system because that's tracked through the pre-tax deduction. What we need to get from you is the employer premiums. Now we're going to be reaching out to all the companies that had over 250 W-2s last year to get that information, but the sooner that you can get that, the better. And again, this is purely informational. This is not affecting the employee's taxes at all. It's just showing on the W-2 so they can see, how much they're benefiting from their employer paying for the health insurance. If any of you companies have workers that work in California, Connecticut, or Ohio, we're going to have to collect some additional federal unemployment tax from you. The reason for this is because these states have loans with the government and they were not able to pay them back in full. And so the loans were taken because too much unemployment benefits were paid out. So they're basically saying that the employer shares some of that responsibility, and they're collecting some additional funds from the employers in that state. In the new system iSolve, the additional FUTA tax will be collected on the first payroll that runs after November 20th, and if you're a pay choice client, it will be collected on the last payroll of the year. Quarterly reports on demand in the new system iSolved, it just shows you, it gives you your company package, which includes deposit confirmations, all copies of all the returns we're filing on your behalf, and you just have to click on download file, and a PDF just downloads right to your computer. It's great. Last but not least, wanted to introduce the newest member of the department, Alexis Yamashita. She's been with us for a few months, and I can truly say that she's made a huge impact. The level that she's gotten to in such a short amount of time is unbelievable. We will ask her questions and she will answer them better, literally better than we can, and we've been working in tax for 6 years. Her instincts are perfect when it comes to taxes. We showing some of her hobbies here. She plays the violin, and we always like to stay on her good side because she is quite the marksman. If you have any similar hobbies to her, please feel free to reach out, talk to her about taxes, about fun stuff, whatever you want. She's great person, and we're so happy to have her. And that's going to wrap up the presentation. If you have any questions at all, you can call the office and ask for Ken, Nick, or Alexis, and always feel free to reach out to us at tax@dominionpayroll.com. Hope you have a great day. See you soon.